So I think we're in a pretty interesting position now in markets. We've had some pretty long bull markets from the GFC with a bit of a sort of euro-led interruption, but things are getting pretty mature. Interest rates are very low, and increasingly yield's been priced very aggressively, yield and growth. So I thought a good stock pick would be something that fits the contrarian mould. So within that range, Telstra has certainly been a very favoured yield stock across the market, and continues to deliver a very good yield, but it has been under the pump in recent times. So there's some pretty clear challenges for Telstra. Most obvious and topical is the impact of the NBN and the rollout of our national broadband network, and how that impacts Telstra's earnings, both in terms of its voice earnings, which will disappear, and its fixed broadband earnings, which it'll go from being an operator, owner of infrastructure, to a reseller under the NBN model. So that transition will wipe a couple of $1 billion off earnings for Telstra, which is a material impact. The good news for them, though, is they did negotiate a reasonably good payment plan from the government. So the NBN will be paying them circa $12 billion in value for its copper network over time, and Telstra has maintained some ability to service that and generate some revenues. So that's a pretty big challenge for them, but the good news is that there is some money coming in to replace that, and depending on how they use that, hopefully with some stock buybacks, reducing the share count, that will alleviate some of the downward pressure on their EPS and their dividend going forward. But that's not really the end of the pressures for Telstra in recent times. It's been suffering a transition across its voice network for quite a long time as the world's transitioned into a mobile space. And as that's been going on, losses in voice have been offset by some very strong growth in mobiles and broadband. And that really accelerated a couple of years ago, where Vodafone had some issues, and they hadn't invested in their network adequately, and Telstra really got a free hit there. They got some very good subs growth, and they were able to charge a pricing premium as well. So that really helped turbocharge Telstra's mobile growth. And as often happens in markets and competitive markets, the competition responded. So Optus and Vodafone both reinvested heavily back into their network, and that has put some pressure back on margins. So in the last year or so, we've seen price competition start to increase again in that mobile space, and that's capped out the growth and put a bit of pressure on Telstra, along with some regulatory decisions there in terms of mobile interconnect payments. So that's another issue that after some very strong growth, mobiles have taken a bit of a step back. And that's really been topped off in recent months with a potential entrant, or likely entry of a fourth mobile operator there, as TPG acquired some spectrum in a recent auction. So they paid a very handsome price, $1.2 billion from memory, to enter into that market, and they'll spend a further $600 million rolling out a mobile network to cover roughly 80% of the Australian population. So the market was quite severe in its response to this. The Telstra share price really got beaten up on that perceived threat to what had been a stable market structure. Another entrant overseas when we've seen this, even domestically when we had a fourth mobile operator with Three and Hutchinson and Orange, that there was greater price competition. So we look at that and say, yes, there's a risk of increasing competition there, margins being impacted, but in the long term, they're not anywhere near the scale that's been built up in terms of assets and infrastructure, not just Telstra, but across Optus and Vodafone as well. So we don't see TPG being much of a threat in that premium corporate end. Will impact probably a little bit the cheaper prepaid end. So yes, competition's increasing a little bit, but I always like a contrarian investment where, to an extent, the worst case or something close to the worst case is already reflected in the share price. So you've got a very attractive short-term yield from Telstra, fully franked. Yes, that dividend might come under pressure, might be cut, but the company has options, both in terms of buybacks, restructuring its balance sheet, costs out, and underlying that, telecommunications, as you all know, mobiles and mobile broadband and fixed broadband are areas that are going to continue to grow in the economy. So I think now's a good time to be contrarian and take up Telstra. So I think I've exhausted my 5 minutes, and thank you very much.